Hey, good morning, everyone. Good morning, good morning. Good to see you all today. Welcome to the PivotBoss Premium Trading Room for April 5th, 2017. Right now, we have the market rallying here in the ES and the NQ, pushing up. The NQ already pushing beyond the previous week's high right now, approaching R3. VWAP is sloping up in both ES and NQ right now. Very bullish move at the moment, playing out. And I think it's a buy the pullbacks type of approach right now, and we'll jump into it a little bit here. We are hanging around the weekly 75% target here, the bull target, as mentioned by JP there, and it looks like a little bit of a HS there. Got a very thick TOI band that's been here, so there's definitely absorption happening in that zone. But I think the flow has been very, very bullish in crude oil. So any pullback opens up a return back toward VWAP, but any pullback I think is still a buying opportunity. I think there's a test of 52s to come, and now that we're between 51, 71, and 52, I think there could be a potential rejection up here. But I think the move has been so strong that it's given the bulls some juice. So I think the bears have their hands full here. I think there may be some sort of pullback, but we'll see how strong it turns out to be. So let's take a look real quickly at the ES here. Seeing some sell imbalances at 23.66 right now. These sell imbalances, anytime you're at highs and you see major sell imbalances there, that's usually indicative of, again, sellers coming into the market. And if those sellers don't get paid, then of course they become fuel for higher prices. Right now, they are getting paid at the moment, so it's prices at or in their favor just a little bit. So they're not quite trapped just yet. We are above 5-day value, so that's a level we talked about yesterday. So yesterday, this is how we left, right? I said the market's coiling up significantly. And I said we have higher lows coming into the previous close. So the idea was that we would see a squeeze, and that squeeze would take us to 5-day value. That's 64.5. I thought it would happen yesterday, and I think everybody wanted it to happen, but you can see it just clearly died off the rest of the session. And then today is when it happens. So still with the higher lows, and then boom, there it is. Now price pulled back off 5-day value, that's 64.5, and then shot through it just now. And this is all kind of happening around the open. So here's the open price right there, that little orange dotted line. Price went bid at the open, came back, and then shot through it. So that tells you that right now with 5-day VPOC being bid, the market is still pushing higher. And if you look at the 5-day volume profile, very ill-formed at the moment. This is the value high, and all of this is the value area, and then down here, all of this is the value low. That's not a proper profile. So I think right now the flow is to the upside. I think we're going to reach for 71s, which is a major pivot for us. That's the level we've been talking about. And I think we have a shot to reach 76s as well, 76.5, because this needs to be traded and auctioned. Right now it's a very ill-formed profile, and the only way to create more action over here is to fill that up with volume, right? So I think we could be on a flow back up and then a flow back down to fill in some of this imbalance. So I think the flow is to the upside. Very bullish at the moment. And the 71s, very important level. We have 75.5 and 76.5. I mean, there's lots of key levels up here. So if we look at this on a average range basis. So for those of you that are newer to the room, this is something I do very often. I basically bring up I bring up a chart. We give an idea. Yesterday's idea was that we would break up and go to 64.5. It took today to get there. Now you see value going bid. We're coming up with an idea of where we could go. We still know we have upside key levels that are up here that we've yet to retest, so we're coming back toward those levels. And so once we understand that the flow is to the upside, and our goal right now is to buy pullbacks and do bullish things for the most part while watching for significant signs of rejection on highs. That would change the ball game. Then I bring up our our targets. I bring up our average daily range targets. These are our ADR targets. So this target is our primary target for the day. We've already reached it, and it's 19 minutes into the RTH session. When you reach a primary target early on in the day, it opens the door to an increased likelihood that the full range target for the day will be reached. That's 73s. So this now gives us, I call these almost probability flags. You know, it gives us the probability or the likelihood that price is going to reach these certain levels. And this all comes from research that I did nearly 2 decades ago. It's coming up pretty quick. Actually, I did it back in the beginning of '01, so it's been quite a while, so at least 16 years. And it was the first major research I did for Nirvana, and it was compression and expansion. Compression and expansion. And it comes based off average range. So I noticed that if most times you have a pattern that says, okay, this back end means that it's going to go to this 100% target. Well, I've measured pattern after pattern after pattern, so many of them, a huge collection in the database, and I saw that most of the time, price got to about 80% of the way. So yes, sometimes you got here, but the majority of the time, you got about 80% of the way. And so instead of shooting for this target all the time, you should be going for about 80% wins toward that 100% target most of the time. But when you have serious compression and you have expansion, then you're more likely to reach those outer targets. So there are conditions where this has a 90% chance of being reached on certain days if there was major compression preceding it. So the goal is we have an upward bias right now. The market's clearly bullish. We finally got above 58, 59 and squeezed. And now the next pullback could be a great buying opportunity. Look at how sloped our bands are. The bands are quite sloped. That tells you that we're in a price discovery phase when they're sloped and price is outside the third standard deviation. So price is outside third standard deviation. That tells you it's the price discovery phase. So our primary idea right now is to defend a pullback to the third standard deviation. And that's where you want to defend a pullback for a shot at reaching 73s. That can give you about a 7-handle trade from 66s towards 73s. And a shot at seeing more strength ahead. So that's the primary idea now. Now you look at the TOI indicator and you see that there's already support there in the form of resting paper. So we have limit orders that are sitting there already at that zone looking to execute this bias. So market is already doing that right now. Perhaps some of you in the room already have limit orders sitting there because that is a PivotBoss trade. That's what we look for. If the market is outside of this R3 and driving, and we have a vertical, upward sloping VWAP that's very sloped, and R3 is sloped, then the primary idea is to defend that level on a pullback. It's defending that level, looking for rejection, looking for absorption, looking for sell imbalances at this zone. That's when we go to the footprint chart. And we look to say, okay, are there sell imbalances here? So say price gets there and boom, it kind of pops up a little bit and there's like a 4,000 contract sell imbalance and price went bid. That would tell you that a big seller's here and they're immediately underwater. And now their buy stops may come out, they're forced to cover, and that sparks the move to 73s. That's the idea behind a trade like that. Right now we're seeing a bit of kurtosis up here at these highs. Kurtosis is when you have the current data projects way off of the profile compared to the data around it. Tells you that there's major volume occurring at that zone. And depending upon if it's buy side or sell side, it can give us an indication. And right now you can see up here, lots of volume at this zone right now. And quite a bit of sell imbalances up here. Quite a bit of buy imbalances as well. So it's a very tight coiled area, and you can see that's why you got kurtosis. You got about a few ticks here, 1 point range, so about 3 ticks where it's very compressed. And mostly sell imbalances because you can see over here, this is the composite, so most of these are sells and these are buys. very unique right now, what's happening, but these sells would project more upside, at least a try. I still think that a pullback into R3 offers a better opportunity with more sells here to get it long. But interesting, right here you can see NQ is starting to look for a pullback. This isn't a great drive though. It isn't a great drive. This is a good drive though from the previous week's high. Price pushed way through it, hit this thick TOI band right there. You see how thick that color gray is? It's like a dark gray compared to the light gray around it. It tells you that there was a lot of resting paper at that area. Still dark right now, which tells you it still is. So that's what stopped the move up from the previous week's high. So any pullback into the previous week's high could still be a great opportunity to squeeze here. Much better than this R3 is. There's not much space and distance there just yet. So I think right now, very bullish at the moment. There are opportunities to fade, counter trend fade here, but I think at the moment that's going to be a very risky trade. So that means selling up here. There is an opportunity to sell up here, but I think the trend is to the upside. So any pullback is a better opportunity to buy. If we go a little bit higher time frame, I'm going to come back over here for a moment. Right here, we were just looking at natural gas, my wife and I, because she's paying our gas bill, and she's like, this bill has gotten very expensive here since last month. And was like, I said, well, the price of gas went straight up here, and Dwayne called the bottom, so. Yeah, we were checking out the chart there. Here's ES right now. This is the daily time frame of the ES. But it's not your fault. We talked about this yesterday, how it was so tightly coiled, and we updated our key range. Key range, so this was the high and this was the low, and it was good. That's a good high. I like that high still. But look, this is a smaller move, but look how that was more of a big swing. Had a better reaction on the low than this one did. So a good swing move. So I updated the key range, and the midpoint is 53.25, and the bottom of this one was 54. So we still had a general major pivot to watch, and that's where price was coiling yesterday. So I said it's hard to establish a trade around here, but that there's a move coming from one either to one edge or the other. If it came back to this edge, it would be a great buy. But yesterday, the way that price was building out higher lows. The way this pulled back precisely to the 40 zone, 42 zone, which is the midpoint of the previous range, we had an upward bias towards 64.5, and that would have taken us right to the high with a shot at seeing a completion of that move, right? We've been talking about those dang 71s, and finally we're coming into it. We're within 5 ticks of it at the moment, 71s, and the 76 halves, right? That's the major pivot from the August 2015 level. It's also a major pivot from here. 77.5 is the midpoint from here on this initial key range. So there's a lot of upside here into those targets still, and that's why I was very bullish. Sometimes you'll hear me waffle like, man, I don't know. I can see it either way. That's when, obviously, I always say it's a tough call. But then when we have direction and we have certain things in our favor, we could step on the gas a little bit. Yes, buy the futures that hedge the usage. Absolutely. That's what I'm training the wife to do right now. She's all over the options chains of anything we talk about, and she looks at certain things that she's researching, and she's like, all right. She's like, I'm shopping for options. I got this. And so she's, she knows exactly what to buy on those lows now when it comes to those options. So it's a lot of fun right now. New level in the trading room. That's right. She just actually walked out of the office right now. She was in here. She took a call. But yeah, let's see. But right now, we could step on the gas a little bit here because we knew that 50, remember yesterday I said 50 is the major pivot here. And we think holding above that level with higher lows implies a push higher. into 64.5. That's 5-day VPOC, and then we have these targets. So that's still in play right now. Now, where this falls off the rails is if this thing can't hold above the previous week's high by the end of the day. All right, that's going to be, it could be a rejection. What if by the end of the day it can't hold it and boom, it's made it resistance and now all of a sudden it gave it all back? Well, the last time it happened, this pullback happened. So at least we'd come back to 40, at least. So the next 20 to 30 handles would be down. With a shot to run those stops and bring it back, right, and go. So this is going to be very interesting if price can hold above the previous week's high. That's going to be 66.75. And so I think there's more upside here, but that's going to be the warning level. If it can't hold there, there's going to be more downside, or at least a retrace of some of these levels. But right now, the flow is to the upside, quite bullish, pullbacks to be defended, and price is currently retesting R3 on a 233 tick basis right now, and bulls are currently defending. So if you go down here, so the first retest finally came. Price has squeezed up a little bit since then. We were talking, here, if price were to pull back, it was, somewhere in here. It moved up very quickly. That's how bullish it is. But there it is, and boom. And that's all you're looking for, is for good trade location. So if you say I'm looking to defend this red dot, then you're looking to get in at or around that zone and good trade location so that as soon as the first wave up comes, you're on the first train to get paid. I always say if you can get a plus 8 to 10 ticks, scale out of half your trade. Because now you're at break even. That's the insurance you're paying now to have a break-even trade. From the low of 68, we've gotten 70 quarters, so it's been plus 9 ticks to get that. That's if you get the best low, right? But ideally, you want to get on the first move up. You want to get paid before the major shakeout leg comes, because inevitably there's always a shakeout leg. But as long as you're scaled ahead of that, you're good. So getting a plus 8 or 10, and I also mentioned it's about ADR. So if the current ADR is plus 12 points because we're in holiday trading, then you're not looking for a plus 8 to 10. You might be looking for a plus 4 to 6 because, hey, holiday trading. Range is smaller. You got to fight harder to get those ticks, right? But when the ADR is a little bigger, then 8 to 10 is a good standard. I mentioned yesterday you can take 10% of average daily range, and that'll give you a good, T1 for a general market. So if yesterday's was 20.5, I mentioned that's 8 ticks. Today, it's 17.75 is the 10-day ADR, which is 7 ticks, right? About so. Not bad here. We've seen from that red dot, price has only gone against it. So the dot hit here, that's 68 quarter. It went 1 tick against you. 1 tick. And right now, it's hit 72.75. So the positive excursion has been 3.5 points. If I can count straight. Almost 4 points. That's the goal. That's the goal right there. If you're a trader, is you don't have to trade every single move in the market. When the market is doing something that has good odds of doing something, else, because, whatever the case may be, if the market is doing something like this price discovery phase, then when it comes back to here, there's good odds that that's the entry. And right now, just taking that one little trade and getting a plus, say plus 8 on the first 8 ticks, right? You scale out of half the trade. So say you're taking 4 contracts, because it's a 4-unit trade. You do half, and then quarter would be a good way to go, right? Quarter. So you would scale out of 2 contracts there on the first half. So price goes up, plus 8. Say you got it right on the dot. So that's 68.5 68 quarter. That would be 72 quarter. You're taking a +8 right there on half. So on 2 contracts. And then say you want to hit the next target up, whatever the next target may be. I mentioned a moment ago 73s. What did I say? I'm going to go to the other chart now. 73 even was the 100% target. I said if it hits 75%, right? So right here, I said if it hits 75% this early in the day, odds increase you're going to hit this one. So the next pullback is your buying opportunity for 73. So another quarter comes off there, right? You try to get those 73. So as soon as 73 is hit, I like to just execute the market order, or you can fight for the limit. You know, either way, it just depends on the day and what's going on. But that's your next quarter. So now you're out of 3 of the 4 units. You've made 2 points or 8 ticks on the first half of the trade. And then this one went 68 quarter up to 73. Right? So that's 4.75 points on the next quarter trade. So 1 contract. Now, where's your last target? Well, the last target, because the first 2 played out so nicely, you can hold on to the last one and try to get those 76 halves now, because that's what I mentioned, right? 76 half might be the next upside target, perhaps 75 half, because it's the FOMC key level, so this one might be a good one to score on the next one. All right, so you're out of 3 of your 4 contracts. You got another quarter sitting up here. You want to get out of 1 contract at this level, the next one. Well, because you're out of 3 out of 4, you have the upper hand. You're playing with house money. So here's R3 again. If price comes back to R3 again, this could be an opportunity to defend and add back. Add back another quarter. If you really feel strongly, add back another half. Just know that if you add back, do your math. Because if that is wrong and it fails, it cannot result in a losing trade. You've made money. You keep the money. That's the point. So you have to add back judiciously. You can't just do every trade. If the first trade plays out this beautifully, then that's the rules for a potential add back. So now you can just be sitting there at 70 with a quarter right now ready to add back. Or, you know, that's sometimes what you can do. Or wait for price to get down there. Let it prove that it's going to reject. And if it rejects, then you enter an add back the same way you would any other trade. You know, looking for rejection, watching for signals, and then entering on a midpoint retest and adding back that way, right? So but you have flexibility. That's the point. You wouldn't have flexibility if you got in late because you were scared. And then because you got in late, you haven't gotten your T1. So then you don't get your T1. Now you're not at break even yet. So you're scared. And fear begets fear. Fear begets losing trades. Losing trades beget losing trades. That's why you have to know your setups, know what your market structures, know what's happening. So when those patterns arise, you know exactly where the point is that you need to be defending. And you can be at or around that point as close as possible. Don't chase. So, you know, that's a good idea there when you're looking at some of these things. It's just approaching the market, and all these things are detailed also at the dashboard. So in Premium, you can go to the 10-part executive training series. Parts 9 and 10 talk about execution, entries, how you scale and exit. Masters talks about, you know, these bands. We have proprietary training for the bands and the pivots, ADR, all that stuff. Lots of great charts and everything, but look at that. It's a price discovery phase. And so once it's a price discovery phase, you drive with it. Yeah, okay, so that's a good point. If you're short 70 and you're wrong, 70 isn't a bad area, right? And it's gone against you a little bit here. I would always say that whatever your T1 is, that make it equidistant to your fixed loss. So whatever your fixed loss is, make it equidistant to your T1. So if you're losing, I mean, if you're trying to get to a T1 and it's a 2 or 3 point target, then you should have a 2 or 3 point stop. 3 points It used to be my standard target, my standard loss stop. But I think that was because I didn't have as good an accuracy sometimes as I had before. You needed a little bit more room. And that's okay sometimes, especially depending upon your time frame. So, if this is a swing entry and you're hoping for a 10-point move down or a 20, 30-point move down, then 3 handles is good. If this is just a short-term, hey, I think this is going to get back to VWAP, then 3 points, might be a little much. So it just kind of depends on your thing here. 70, you're close. What I would do is if you've held, oftentimes what I like to do is scratch. So you could scratch a quarter, here, and it would only be, 5-tick loss. But, you're kind of leveling down a little bit. So I'm a big fan of scratching a trade and trying to just minimize the pain. Because I have a fixed loss there, but my intent is never to use it anymore. That's why I have a good quick target on a T1. Get me to T1, and our entry should be good enough. The trade location should be good enough so that we can get T1 quickly. And if we can't, then we need to start talking about scratching that trade, mitigating the risk and loss on that trade. This is the LVN. So in a strong market structure up, bulls are defending the LVN. That's the name of the game. You defend the LVN. Once it pushes through, you defend the LVN. Once it pushes through, you defend the LVN. So that's the level that really needs to give in order for this to at least retest this low. It needs to get back below that level. So that's major support right now is the LVN at about 70.5. But a nice little drive so far. I think we're getting close to a point where we may be topping out, but I think that doesn't come in until about 76 or 77. 71 is the FOMC level. We got it. 75 is another FOMC level, or 75.5. We're coming into that one. So scratching partial is something I do just to lower it. So if you still think, hey, there's a great shot that this still goes lower, at least to 69. There's VPOC shift up there. Then you can just, lessen the load a little bit. Yeah, there you go. But that, you're still in the game a little bit, but you scratched a little bit, so you can just, now the risk is limited a little bit more, and then, you can give it a little bit more room to see if something happens here. Ideally, what you'd like to see at 70.5 is a bunch of buying balances that just can't get paid, and that will lead to a leak right through that level. This is a sloping R3 right now, very bullish. But what a great move, a nice move here. That's a PivotBoss Bands R3 bounce right there, R3 bounce. It's a price discovery phase type of trade. And, you're good for a couple of rotations, 2 or 3 rotations at times, but at some point, a market can't keep that, intensity. And so at some point, it will find a spike high, pull back sharply, and then start to form some sort of digestion of the recent price move. So right now, still in a price discovery phase, short term, but at some point, it'll fizzle out, and then we may see a larger range develop. So look at the 5-day profile here. This is what I mentioned earlier, right? The 5-day profile, I said, man, that's value high. That's all it was. I said it has to go through that level in order to build some volume. Look, the volume is coming in. But in order to increase the volume, it can't just keep going up because then it'll be left like that. So it does need to come back and retrade through it to increase that volume some more. So I do think there will be a pullback here that at least brings us back towards 66s. Maybe 65.5, right? I do think at some point we do come back because we have to re-auction that, but then it'll be a buying opportunity right back up to retrade it again a third time. This is round 1. The next pullback, round 2. The next, and then the continuation would be round 3, and it'll build it a little bit. And so you can see VWAP is coming up to about that zone. That could be about the time where the next major buying swing could come in. So if this tires itself out, you can see But this is the developing volume profiling analysis that, again, you just have to understand how a market wants to trade, how markets trade, how they are. That's why I teach auction market theory, because you can anticipate how a market will need to retrade through levels in order to create that robust, balanced, range. So that's something to keep in mind. But right now, it's still up. So nice move going higher. But very, very nice continuation. You can see, again, the LVN still holding, and 75.5 may be ahead. So, again, you can see the approach to scaling. If you get paid quickly and it reaches a couple targets quickly, how you have an upper hand in the trade and how you can trade from a position of strength. Additionally, when we got on the mic right away, it was about right here. And I said, this thing is driving strong. And then all of a sudden we're here. It's like, we reached that very quickly. The expectation would be reaching this one. You reach this one quickly, the expectation is you reach the next one, right? So it's still driving. That's why, we're way out there. So the next one up is going to be 78s. Obviously, we had 75s on the next bounce from here to 75, but then it'll hold again and try to go again. So that, the next rotations could just stretch this thing right on out to some of these upper targets. And again, any pullback through this zone could provide an even better continuation into those levels. So a nice trendy market right now. But again, this all goes back to how we analyze the chart. It's not just, this is a setup day trade for right now. This is a continuation from yesterday's analysis. And it's a continuation from the analysis that we've had over days and since the low that was reached at the end of March, down there near 23.17, which was a buy zone, or coming into a buy zone. We knew any push down there would be rejected. So that's why I love the market. And I talk about this from time to time, saying I love the market because it is like a soap opera. It is like a telenovela where, it's constantly evolving. The storylines are constantly emerging. You have to continue to be around it to, understand what the storylines are. So, that's what the main goal for me is where I really got really, really good is when I started to mix higher time frames with lower time frames, seeing the big picture and being able to bring it down to the lower picture so that I have more confirmation on some of these trades. This is a perfect day trade. And again, I've been focusing more swing, options and things like that here lately. But when this is the type of trade that you wait for if you want to take a trade, right? Oftentimes when it's sitting here doing this mess, it can be very difficult. But when you have high odds confirmation, that's where you want to engage. So a nice little move there. The PIMAs have been perfect. Yeah, that's another one right there. And that's another deal. It's such an easy indicator, the PIMAs, which is just 3 pivot-based EMAs, but it keeps you directionally, in the market there. So there they are right there. I can take off my S3 band, but look at how sloped they are, and it came from a period of indecision, right? Indecisive sideways action, and then boom. It breaks out of that action, and look at how the PIMA's alligator open, right? And then you get stacked and sloped. Fast is above the middle, middle above the slow. And now pullbacks into or toward that trigger zone, right, are buying opportunities, buying opportunities, buying opportunities. And, 13, 21, 34, so that's another one right there. This is what I call my normal. Is 21, 34, 55 just for general purpose. And then I have a higher intensity one where you pop it up and you can do 13, 21, 34. Or 8, 13, 21 in this case. This is even tighter. But very, very nice overall with this thing continuing higher. Nice continuation. I still think more upside into those 77s. 76.5, 77.5, all that. So Good move right now. You can see YM has a huge range today. Huge range. It's already well into extended territory. I need to check that out. ES still pushing up. I haven't really concentrated on anything else because this thing is paying so much. But here is the NQ. I mentioned earlier. Look at that thing. Tightly coiled, breaking up. 5400s became significant support. We're breaking through the previous high. So if you squeeze this thing a little bit, really get in there so you can see some detail. I mentioned earlier, this looked different than the ES in that this got outside of R3 here. But look, this didn't really drive that hard. What I mean is it didn't put a lot of distance, and intensity of the move wasn't that strong. Didn't put a lot of distance between R3 and price. It kind of dribbled up and then dribbled right back to it. So that's why I said, you know what, this is probably not the best opportunity to defend. That's a tale of two different cities. Right now, you're seeing this microabsorption. I think we burst higher here at the moment. So this is microabsorption coming in off of 63s. If there's sell imbalances right now at that level, that could be an opportunity to squeeze big right now. Let me come over here and bring up DNQ. Oh, too many buying balances right now. But the lower edge does have the sell imbalances. So 62s. So right there does have the sell imbalances. So that is showing you the absorption is there. You've had 2-3 rotations into these highs. You need to start getting paid, though. These bulls need to start getting paid. So right now it's not really happening at the moment based off of the footprint just yet. But you can see that they're trying to defend that area at the moment. But the point is, this is a tale of two different trades. ES drove hard, so it made a pullback much better buying opportunity. NQ barely did anything, so it did not. Instead, I said it did drive nicely off the previous high. So a pullback to the previous high could be a great buying opportunity. And that was a much better idea. It didn't quite get all the way there. It was about 2.25 points off. So it got to 55s, and it was 52.75. So it was 2 handles off the zone, but it was a much better zone, right? This would have been a losing trade. This one, you're still waiting and you're watching, and you're still in the game. So again, it's all about context clues, reading the market in its current context, and just sticking to the patterns. So the patterns are, if we're driving into price discovery phase, then it's a great buying opportunity. If it's not driving, then perhaps it's a lazy trend. And when it's a lazier trend, then bring up S2. Right? Bring up S1. I know it's a little difficult to see right now, but S2 is 59 right here. That's S2. That's S2. So right now they're kind of defending off of S2, and it's kind of just a quiet trend up at the moment. They're trying to defend this hold right here, and that would tend to suggest a major squeeze to come. And you can see they're still battling in that zone right now. The NQ looks quite a bit different than the ES, though. The ES is playing catch-up, right? It's barely getting to the 70s right now, and the high is 24.01. The NQ is this is an all-time high. I believe that's the high right there. So it's already there. And so I guess that's why, there's more juice in the ES to catch up right now, while the NQ is just getting some side love, I guess. Haven't said a whole lot here about crude just yet, other than I believe that the trend is still strong. I believe that we're still approaching 52s. But now that we are in the space between 51.71 and 52, this is the zone where I think that we will know more about rejection. And so 4 minutes to go until crude oil inventories, and prices developed a nice little range. We have a nice upward sloping VWAP, nice little divot here in the volume profile. So if price were to drop into that section there, 5160, there's an LVN, it's volume profile, it's just below these lows, so it's kind of running those stops a little bit. That could be a great opportunity to buy and flip it right into 5191, which is yet to be reached. And that's our primary target for the day, based on average daily range over the last 10 sessions, based off of this low right here for the day, 5111. 75% of the way would be there. On an average day over the last 10 sessions, price would take us a little bit higher, or the target would be a little bit higher. And that would be 52.17s. I don't know if we reach that today, because again, I'm interested to see what 52s have to offer. You can see that R3 is starting to go from sloping to more flat, so it's flattening a bit here, 52.11s. It may begin even to curl a little bit downward. So I guess, if we were to go into that zone, that would be a trap perhaps, right? Above 52 into R3, and that could provide a return to value. Because right now it's clear that value has been created for the day at 51.67s. And you can see how it's hit that level, dropped, and hit it, and chopped, and then come up. So I'm just visualizing how this market could turn out here. We got under 2 minutes until this thing occurs. And so we'll see what happens here. Now, if there's any failure to hold this level here, then the tide changes. And, again, that's 51.71 is the bottom of that zone. So if you start breaking through LVNs below that level, then 51.16 to 51.11 is the next zone down. Your primary target based off of whatever high we may see there would be here. So then you're starting to look at this area as a target upon that violation. So those are a couple of scenarios here as we head into it. Still think you're short-term bullish into this upper zone, and then up here it'll be interesting to see how the market reacts. $1.5 million. This thing drops down. Boom, right through it. Slice right through the zone. That's a huge push down. So 1.5 million, and that they were forecasting a draw, and they got a build of 1.5. So the thing I'm looking at is VPOC went offered hard after it had been bid. So we had a VPOC shift up. Remember, we were talking a little bit about VPOC shifts yesterday. VPOC shifted up to here, held, and then eventually took it bid big, boom, and came up here. And then the next retest, if it goes bid, ideally should also be bid. But this was a one-tick VPOC shift up, and then it went bid. They took it offered hard, and so any retest of that zone ideally is an area where bears want to defend and drop this thing even lower. So I'm wondering if this is already the rejection that we were talking about coming into 51.71 and 52s. So the over-under today, and I know we still have plenty of session here, but this is a developing situation here. We have a midpoint of the day already in. And it's precisely 51.5. So the current day's midpoint is 51.5, and right now that's where bears are currently defending, right on that level. 51.5. That's the midpoint of the day. Right there. So from that high to that low, that's the midpoint. That's going to be a big over-under today. If we close below it, we're back here toward 51 or something, man, that's going to show a significant little tail up there. And I think initially that would at least lead to a retest of recent lows, which is here. So interesting. So right now we're kind of in between zones. But we're between zones right now because this is part of the squeeze that we've been talking about above 48.42. I said if we can get above 48.42, above 48.50, it's a clean, it's clear air. Clear air all the way up to 51.71. This all started down here. And remember, once we got below that midpoint, I was bearish. So I was saying, man, I think this is, you don't see many triple bottoms. You know, I thought we were going to break, and it was 47.30 where it formed a box below that level. And I said, if it pops above that zone, this could get interesting back up the range. But I said, it's really going to take a push above the FOMC level, this zone. And it's clear air to three targets, 50.20, 51.06, and 51.71. That was it. So the idea was that. And then right here, the idea Monday was, oh, I love that it did this day. And I love that it's strong trend. Because now I want to look to trap here and finish the move. So right now, we've just completed an awesome move, an awesome trade, an awesome, you know, however you wanted to engage that the entire way, right? This was nice. And now, I said today, now we have to see what happens here. Because now between this level and this level, there could be weakness, or these bulls who have been very bullish, hey, why can't they get them back up here to an MCV or a key level above? The sell-off started here, right? So, you know, I said I had kind of softened on my stance that it was going to be a hard sell, but I still knew it was going to be an area that bears are going to want to defend, and I wanted to watch the reaction. And this has been quite a reaction so far. We've seen it play out. I talked about before that if it fails to hold 71s here and below the LVN, that could be quite bearish. And we're starting to see the development of a rejection tail play out. Crude oil has just pushed to new lows here a little bit and then bounced quickly. Still holding below 51.50. So we're starting to see the opposite end play out. So now we have, you know, this impulse kind of move from here up. You know, do we get a big push back this way? How far back do we go? Do we come back to this high? Right? I just mentioned a moment ago that if this is a rejection day here, then I would think that we could at least come back to where that recent pivot low was. And that's where the trap occurred. So that's the one I just pointed to intraday. So if this is a rejection day, perhaps we come back to that pivot at the very least. And then perhaps it comes back up and maybe we build up here a little while before we come up and trade back within here. So it's a fluid developing situation right now. 52s to 51.75 was the right zone to watch for some sort of rejection. The report made it easy because it just slammed right down. Didn't give us a choice. And so that's why I say just, you know, you don't have to be the smart person. You don't have to be the smart guy, the smart gal, and say that's going to be the high right there. Let the market tell you that that's the high. Let the market react and reject, right? Just know what to look for and where. Before we had this sell-off, we were trending down, and I kept pointing out the fact that we would test the previous session's high and fail. Test above previous session's high and fail. So when we were testing above the previous high here, I said, watch out for a failure, because that could open the door to here. And I completely undersold that move. But once price got there, we knew and we saw the footprint, and it was completely filled with buyers that could not get paid. And I said, it's a day that's going to continue driving. And that's when we said, I think this pink line is in view. So we updated our analysis that day to reflect the changing environment. But we knew what to look for and where, and that's all this is practice. Every single day we talk about these levels. We talk about what we're looking for, where we're at, because these moves aren't always happening intraday. Not every move is a great intraday trading day. but we knew what to look for here, and there was plenty of time to watch this develop, right? And then, Paris comes in today and says, hey, I think 52s is a zone to watch for major rejection. You think bear's going to come in? Right? And that's exactly what I want to see. All of you are coming in knowing exactly what to look for and where. Dwayne got us paying more natural gas because he called the low. So, that's awesome. And everyone else in here has been in here, Dale and Brent and JP and Lee and everyone else. Tom has contributed, at different times, and everyone else that's come in here, and that's all you want to see. So this is awesome. I love to see that. You see every day. I love to talk this stuff, especially when it's playing out. I mean, that means that, hey, our ideas are paying, and I teach so many different ways to engage that. But this is awesome. This is an awesome little rejection here, and again, the market told us that. So the over-under right now is going to be that 51.50. That's the midpoint of the day. And I think right now we're holding just below it, so I wouldn't be surprised if we try a little bit up again. But still, this is the beginning of what could lead to a little bit more of a pullback here. So we'll keep an eye on that. Yeah, that's right, Dale. I mean, depending upon how today finishes the day, that 51.50 will be super, super important overnight, pre-market, and tomorrow. So the NQ I talked about before, I was watching for signs of rejection. I knew that it may hang out here for a few days, but it really never showed it. The one times it got down toward 54s, bulls have come in and really held their own. We were looking for perhaps another little squeeze, and you can see this morning on the pre-market report, I said they're defending the previous close right now. They're defending the previous close. And if they're doing that, remember, this is why we have PivotBoss pivots. Previous close, previous high, previous low. And then this is the midpoint of that previous range, and that's the pivot point, high plus low plus close divided by 3. And this is the differential of those two up. So if the market's going to defend the previous close, the only logical explanation for higher prices is that it's going to test the previous high. Just logic. If they're going to defend the close, that's because they're guessing that they're going to test this weekly high. And because of the trending market right now, what I mentioned pre-market is that if they're going to test that high, then they're likely going to push through it. And if they push through it, then they're going to go to the 25% expansion target. That's this one right there. That's the one I talked about pre-market today. Look at today, how price pushed through the previous high, and it's already becoming a trend day up. The midpoint is at where the stops have come out, trend day up. So that makes that point very important tomorrow. Tomorrow, when price returns to that level, bulls are going to want to keep it bid. That's about 54s right now. 54, 55, that general zone, defend for a continuation. But right now, the idea was this morning, pre-market, defend that previous week's close and squeeze to that target, 54.85s. It's still going toward that zone. I think I said 86.5 or 86s. But yeah, that's the target. I think the actual target is 54.86.5. 86.5. So you can see how these things flow from the pre-market report on through, and the ideas and how they change. Because at first, I was looking for some sort of signs of weakness, and we were seeing some, but it just wasn't enough. And when bears are coming in, but they're not getting paid, their buy stops start to come out. So a nice move for the NQ. It's really picked up right now. And it's odd because it picked up when the ES pulled back. Like the pullback right here, this thing just zooms up. Right here, it got strong, and it got stronger also. But I mean, during this little pullback phase into 70, that's when the NQ really got much more heated. There it is. This is the first trading day of the month. During the Market Outlook webinar, I said this is a zone where we're anticipating weakness. It's a hard call. We'll see what happens when we get there, but we're anticipating weakness. And we saw how the market rejected that zone yesterday, and then we saw the 1260s emerge as a major pivot for the day. And the midpoint was like 59.60 or something. So that's a zone now where bears are going to want to defend for a shot at where? 1240, back toward that zone, right? And you can see that play out today. Didn't quite get perfectly into 1260, but that's about where it was, right? And it dropped downward. Broke through the previous lows, continued. We do have still bulls to position off of 1240, so I mentioned that this is a range right now that's developing. And we could see another bounce off that level and see this continue to trade, because this is VPOC. We're trading above and below it, above and below it. At some point, this range will influence the next expansion phase. Whether it's up through 65s or down through 40 remains to be seen. I've been talking about fading that level back toward this zone for a while, right? Because I thought once price got above a certain point, I said, okay, now we probably have a trading range that's emerging. And we'll trade in that range for a while. And then eventually we'll do the next phase up and trade in that range for a while. And so that's exactly as this thing is played out. And I think that very similar to crude oil recently, where it had a range at the top end of half of that range. So the range from here to here, it's traded mostly in the upper distribution. That's a lot of late bulls that are buying. And if they don't get paid through 65s, the stops are below 40. And that will influence a move back toward 1200. There's a 5160. Here's VWAP sloping down. And yesterday, if you were in the room, we talked about 1260. So there's the 1260 level. Price got above it, tried to make it support, took it offered, made it resistance, made it resistance, made it resistance. And I said, uh-oh, there we go. That's the level. Here it is, right? Within striking distance of it, and pow. I was hopeful this morning that we might see a bounce to give us a retry during RTH. I was hopeful that this could be a box that could lead up here, and then we could sell it again. But no dice. Broke that to the downside, formed another box, broke that to the downside, formed this IHS 3-point reversal, and is now holding just above it. So that tells me that we might be range bound here for the most part with a downward bias. So any bounces, selling opportunities. So this might be the range here where we're developing short term with a downward bias. So not a whole lot of opportunity at the moment in GC, but been very, very nice. Yeah, you know what, Scott, this is what I've been, trying to formulate an opinion on for the ES with regards to higher time frame, because I do think that there could be something brewing, but it's all kind of happening right now. That's why I'm very interested to see how these markets behave up here, because the ES again hasn't quite looked like this since the election. It's been straight up, and right now we got a big major pivot high. We got a quick retest and a drop to a new low. So not only did we pull back for many days, we had a pullback lower high and a bigger swing sell-off. We had a hard time just stringing together 2 down days in a row before that, If you got 2 down days in a row, that wasn't even down days. Those were just sideways. That's how bullish this market has been. So getting this recent bounce up and into this level again, which is 76.5, and that's kind of the midpoint of this zone right here, 77.5. Getting into this zone here, if there's not much acceptance beyond the 70s here, that's why I said I can't see it getting much above 80, then I think we come back down. I think we do. And we could be looking at 2,300 to 2,310. So, that's why I do think that there may be a bigger pullback maybe in the works here, but it's kind of a developing situation right now. It's doing it as we speak. And it could be the next day or two as it hangs out and builds people in, and then oof, it drops it. And then down here would be another buy. That would be a buy back to 54s. Right now we're developing this balanced range, and 54 is kind of the mid pivot there. That's it. This is the upper distribution. This is the lower distribution. So, that's why I think the market's still been bullish. We're kind of developing up at these highs. So the edges is here, and then you have a big volume ledge here that's right at 80. Big volume ledge. That's why I said I don't see much above 80. And that's why I think, whoop, this may be ahead. But it's forming right now. So right now, again, one thing I usually mention is it's a good idea to watch, right? The FOMC levels. The first move was up. Once it formed rejection there, I said it usually comes back to it and then through it. Once it gets through it, it usually comes back to it. That's why I've been talking 71 so much. 71, 71, 71. Ever since this low, it's like, hey, right in here. You want to defend there for 71s. It almost got there, then it pulled back. And then this week, it held at the midpoint of the week and is drawn into 71s. So now, that's a very important level, but it went offered. So what do we know about a major pivot being offered immediately? When it comes back, they're still going to want to defend it, and that can drive it again. It's like a VPOC shift, right? VPOC shifts up. So VPOC was here, it shifted up to here, and then it goes offered immediately. So the retest is likely to be offered too. So those are some clues there that I've been working on, but it wasn't until today that we've tested it, so I haven't really been able to see what the market reaction. So we've seen it all live right now.